So this is another video in our investment property special series. I'm talking to you today about the 4 key characteristics that you absolutely have to get right if you're looking to buy an investment property, and particularly here in Auckland. Now, if you don't get these things right, you really are increasing your chances of financial shipwreck, unfortunately. And I know that because I meet clients all the time that have done it on their own and unfortunately got one or more of these 4 areas completely wrong. So what are they? We're going to go through them one by one in detail, but just to give you an idea, the 4 areas are growth, income, tax effectiveness, and affordability. So let's go through those one by one. So growth, what do we mean by growth? Well, it doesn't take a rocket scientist to really understand that everywhere in New Zealand is pretty much going to grow in value, right? All property will grow in value. But you must be looking in the areas that have the right growth characteristics or potential. Those are areas where the land is valued low. So what we help here at Goodlife is making sure that you are buying in the right areas. It's absolutely essential. You don't want to be buying in central Auckland, for example. The land values are too high and it's going to affect the rental yields, which is our next area of or key element that we're going to look at now. So income, what do we mean by income? Well, you've got to be getting the right rental yields. Now, we absolutely demand the right rental yields for our clients, but if you're buying at overinflated prices, you're not going to get the right rental yields. A good rule of thumb to look for is, let's say you're buying a $400,000 property, take the 400 part of that number and add $20 or $30 a week to that as the weekly acceptable rent. You're going to get into the right kind of area for acceptable rental yields if you do that. So you should be getting, for example, for a $400,000 property, around the sort of $420, $430 a week rent. That's on the lower end of acceptable rental yields, but that's absolutely fine, and you must be looking for the right rental yields. The income characteristics have to be exact. The next thing we're going to talk about is tax effectiveness. This really is a twofold thing, especially if you're couples, because if you're a couple, you'll want to make sure that it's not you two buying this property. You're buying it through a different type of legal ownership structure. It's very important that you have this set up. We absolutely stand behind an LTC, which is a type of a limited company, as the correct ownership structure of residential investment property. So that's the first thing, because you're going to be clipping your ticket accurately to get that nice big fat tax return at the end of the year, which is what we all want, right? The other thing besides the ownership structure really is the relationship. You must have the right accountant, and it must be a investment specialist accountant. Okay, accountants are like doctors. You don't just want a GP. You want a specialist. Okay, you want a specialist investment accountant. They don't cost more, by the way, and we can help. Or I can help point you at least a couple that I know that are very good, and they don't cost the earth. In fact, in a lot of cases, they cost less than most accountants out there. So you've got to have the right ownership structures for this to own the property, and you've got to have the right relationship with the right accountant to make sure you're clipping your ticket everywhere you possibly can. So now let's look at the 4th area of key elements to look for when buying investment property. It's absolutely essential that the place is affordable for you. You can meet those other 3 areas. Yes, it's in a good area growth-wise. It's going to provide you the right rental yields, and you've got the best accountant on the planet. But if you can't afford it, what's the point? You've got to make sure it's done affordably, and there are various software tools. We have one here called a property investment analysis that can tell you what it's going to cost you per week, so that you know whether or not your budget can handle that. So, the only way to do that is really to find out what it is you're spending your money on, and then do an analysis on the property to see what the weekly outcomes will be for your back pocket, because it's very rare in this day and age that you will get a property that is positive cash flow. Okay, it's not a bad thing to have negative geared or an outlay every week. In fact, I would call that a turbocharged savings plan. But it's absolutely essential that you can afford this, and you need to do the right analysis on your spending and the right analysis on the actual property to make sure that you can afford it. So those, very quickly, are the 4 key characteristics to look for when buying investment property. I could talk for half an hour on each one, but I just wanted to put this quick video online so that you can be doing this game right. Alright, thank you. I'll speak to you soon.